All right, it is Friday, May 14th, and it's only a little bit after 1:30 in the afternoon here on the East Coast, and I am pretty much done for the day, so I thought I would purposely distract myself by doing this. Uh, First of all, I know I kind of look like Bill Cosby in terms of wearing college paraphernalia lately. This particular shirt came from one of my former students, and so if he's watching, I appreciate the gift. Um, anyway, let's talk about a few things. I am having a lot of fun right now as compared to last Thursday, when I should have really had fun. And the more I think about that, the more I keep thinking that I was just this close. It really wasn't a $50,000 hit; it was $100,000 in terms of what I should have made versus what I lost. And in that case, just 2 or 3 minutes, that close. Kind of like the Red Sox losing the '75 World Series. You're that close. Anyway, having some fun this week. Back in the Jelly Room. Just share some of the things we're talking about for your information. Talking a lot about the correlation between the euro and ES. What you'll often find during the day over the course of the year is that sometimes it correlates and sometimes it doesn't. Overnight, there seems to be a very strong correlation and has been traditionally, but also traditionally, there usually is not a continuing one-for-one relationship during the U.S. market open. But lately, there has been a great deal of that. So we're talking a little bit about that. I don't really use it as an indicator. I look at it as too much information. It's certainly nice to see it confirming some of the setups when that's the case. And so anyway, we've got some people that really follow that. Let's see, something else we have been talking about lately also, if you're in a brain funk, which we all get in from time to time, sometimes it's easier to trade what I'll call a derivative instead of trading your instrument. For example, if you just got a brain fog in terms of ES, right, the S&P E-minis, why not trade Europe, during the U.S. hours and use ES as the indicator? And it may surprise you, and I've done this at various points in my career in terms of how all of a sudden you can get yourself out of a funk, um, and give it a try anyway if you've got your access to the Europe markets or another derivative, that sort of thing. Trade one index or trade one future contract vehicle, but trade it based on another one, that kind of thing. So just a suggestion. So we talked a little bit about that. I'm having also some fun with this time-based P&L chart, which I've shared a couple of times already, and I'm sharing today's to kind of give you a feel for my particular handling of the day, my particular bias. And before I do that, though, I had one. I got alerts hitting there. One email the other day, or actually this morning, from somebody, and I appreciated it. He sent me an email, basically said, "Remember the VIX at open." And I was watching it, but just to follow up a little bit more on again last week and all that kind of stuff. I am basically a local. You hear about locals on the exchange. I'm a local, but I'm not on the floor. So I will provide liquidity. And when you look at this chart, I don't know what the Dow's down now, maybe 200 points as we speak, maybe more. But most of my money was made on the long side. Okay, sure, I traded retracements on the short side, but I provide liquidity, and I'm pretty darn good at picking my spots. And again, even on Thursday, if it weren't for that one in a lifetime time situation, I would have been fine. So what I'm going to remember is not to get away from my bread and butter. And I can't let a world event like that change how I trade. Have I been gun shy at times in terms of size, in terms of taking these trades? And was I a little gun shy today? Yeah. I mean, I'm human, and I admit that. But the fact is, with ES down, I don't know what ES is down, 1127 from 1157, so down 20, 30 points, if I'm reading that right. So, the markets don't go straight down. And so you've had these wonderful, anywhere from 2 to 7 point retracements, and you just have to pick your spots. And since our business is market timing, we have to time it appropriately. And so, there are all sorts of indicators and signals to do that. Now, back to this P&L, I thought what's interesting here is you look at the course of the day, and pretty much profitable every single 30-minute interval except for two, which is right at open, right during the U.S. market open. And if you look at that, and if I asked you how you thought I was trading pattern wise, your response would probably be that, well, he was long the market at open. And yes, I was biased long. I was trying to make sure I always had a position on in case the market did what it normally does, which is reverse the gap. Now it reversed the gap by a few points, but I went to the well a little bit more after that, and so I stopped. But then what you see after the 10:30 interval begins is basically adapting to the market conditions. Okay, so we got information the first hour of the market, very helpful, very useful. Okay, so let's go on. And actually, that 10 o'clock bar was lower, and the comeback actually started in that half-hour interval and reduced it a little bit, and then you see that carrying on. So. Sometimes I can feel the market a little bit better if I'm swimming in it than just watching it from the shore, as I like to say. And so I was swimming in a little bit. Nobody can tell a weak market better than a stuck long or someone who's long the market. Wasn't really stuck, but I had pretty strong conviction and just stayed with it for a bit. So again, you can kind of see how the day plays out. Again, most of the money made on the long side. The larger bars in the U.S. session, you see the one at noon, and you see the one at 1 o'clock. The one at noon is one of my favorite patterns, which is buying the noon fade or fading the noon push, I should say, on a trend day when volume dies and last person's there basically throw it up. By the way, which also worked last Thursday. Had I remembered that after 2 o'clock, I needed to be a little more careful with that. And then this 1 o'clock bar, which was the retracement toward the 15-minute trend line, and taking that short. So it's kind of interesting when you look at this. Now you also see some colors, some orange or tan type colors here as I'm looking at it, and basically those are stay out of trouble periods for me. It's a reminder, it's a visual reminder to look at that, and I know that if I happen to be awake during Europe's Open, that first half hour, I'm not usually alert, and I don't typically trade it real well. Not that it's not tradable; it's just one of my bugaboos. And then you see the 9 o'clock bar, which reflects 9 to 9:30. I try really not to do a whole lot of trading there, and really I probably shouldn't do any trading. That is a period of time which traditionally to me has turned out to be low probability in terms of my being in sync with it. Now you see I was also down a little bit during that interval, and again fishing a little bit on the long side, in part because it had worked so well overnight, and I was maintaining that bias. If you shift back toward the pre-U.S. Open hours, you see how I was biased there during the Europe session, and did pretty well there. So all you can do is again just keep plugging away. I think the more that you can look at every trade on its own, without bearing to the prior trade, and in this case, every time frame. I was having some fun again with this today, trying to get my rhythm back, and basically say, okay, I'm viewing each 30-minute interval like a new day. All right, and I wasn't, I don't normally look at my P&L a whole lot during the day. I glance at it from time to time, but I don't stare at it. But in this case, I can actually see the progression over the course of the day, and I can actually have a clean slate during each half hour. So again, just some things I thought I would chat about in terms of it being helpful. Again, I'm an electronic local, basically a member of the Merc. I provide liquidity, and you just always have to pick your spots. And just because of what happened on Thursday, not going to change the stripes at all. So anyway, that's what I had for thoughts today. We'll do another post over the weekend. And oh, by the way, thank you for all the responses and emails to the violin solo. I know this is kind of a trading blog, but it's my diary, and I got to tell you, it was just very, very inspiring, and I've watched it several times. So even while I'm in trading at times. So anyway, thank you very much. Have a great Friday night, and we'll do a post over the weekend. Take care.